Good morning, Derrick Chevalier here. Great to be back with you on CCN Sunrise. We've got a great show. My first guest, Joseph Dimino, an enrolled agent and financial planning expert, who's going to talk to us about the Trump tax law, its changes, and how they affect you. Tell us, Joseph, for those who don't know, how have these changes impact? Give us an overview of those changes in the new law.
Well, the Tax Cuts and Jobs Act, which passed in December of 2017, they say was one of the biggest cuts in 30 years. So with these cuts, it's about 1,000 pages worth of paper that this bill is all about, but it talks about the standard deduction changes, the tax rate increases, or decreases I should say, credits that are offered now, standard deduction and itemized deduction, things that have changed. So overall, the corporate tax rates have changed. That was the biggest and most drastic of the changes. It went from 35% for corporates to 21%.
Okay, so let's be more specific here. Going back to the standard deduction, tell us what that is, where it was, and where it is previously under the new law.
Okay, so the standard deduction, the way it was, is $6,300 was for a single filer. They got to deduct that from their income, their adjusted gross income. And for married people, they got to deduct $12,000. So the singles went from $6,000 to $12,000, and the marrieds went from $12,000 to $24,000.
And just so people understand, so if you earn $100,000 a year, that's not your taxable income. You're talking about the adjusted. Well, explain that a little bit to folks.
Well, what people don't understand is that they think that I'm in a certain tax bracket, so that tax bracket is what's taxed on my income. So for example, if you made $200,000, just say, so it's not $200,000 times 32%. There's different stratas. There's a 10% level, there's a 12, 22, 24, all the way up to 37%. So each level has different income brackets.
So it's really specific to your circumstances, how the tax law is going to impact you. It's not a one-size-fits-all.
That's correct.
And tell us, one of the issues I know that if you're a professional who previously deducted expenses over and beyond what your employer provided for you, you could write those off. What's the status of that type of deduction now?
So those were Schedule A itemized deductions, which if you had meals and entertainment and you had some mileage costs and different things that went along with being an employee that were not reimbursed, then you were able to deduct those on your actual Schedule A itemized deduction from your gross income. But now they won't let you do that anymore. So
and part of that is covered by this increase in that standard deduction. That's
right.
The idea.
That's right.
So also, would this mean that there might be certain people who are independent contractors who do a lot of work outside or are not specifically employees? Would they maybe start considering whether or not they should switch over to a corporation, subchapter S or something like that?
Well, those things that you just talked about, that we just talked about, those deductions that are going away, that does not affect independent contractors or self-employed people, because you still get to have those deductions and they're still write-offable.
So again, for employees, you've got a larger standard tax deduction. If you're an independent consultant or you have a corporation, you're not impacted by that part of the law. Okay?
That's correct.
So another thing, we'll go back here, just got a couple of minutes, but the big one are the limits on the interest deduction on your largest purchase, generally your home. Tell us about that.
Yeah, that's also an itemized deduction on your Schedule A. But if you have a loan in place that's $1 million, the interest on that loan is deductible. And if that loan was before December of 2017, you still get to deduct that. It's grandfathered in. But $750,000 is the new loan limit. So that's whatever interest you have on that $750,000 is the new interest deduction.
And so under that new interest deduction, there's a limit of $10,000 that you can write off. Is that right? Or explain that to me.
Right. So the $10,000 that you're referring to refers to the state and local income taxes. They call it SALT for.
So you can write off 100% of the interest on that $750,000 loan, but you cannot write off, or the limitation for state local taxes is $10,000.
It's capped at $10,000.
10 up to 10, and so after that you would pay taxes on that additional amount.
That's correct.
Right. So that's very very interesting. And there's lots more to talk about. I hope you'll come back and talk to me about it and share with our guests. Listen, everybody's different. You might want to contact Joe or another tax professional, and we'll see you next time right here on CCN Sunrise.